Is the petrodollar dead? The real story behind global oil and USD. What if I told you that a single agreement made in the 1970s allowed the United States to dominate the global economy for over 50 years, without firing a single bullet? It wasn't about gold. It wasn't about technology. It was oil. More specifically, it was the petrodollar, a quiet but powerful arrangement that forced nearly every country on Earth to use US dollars to buy oil. It created relentless demand for the dollar, enabled America to run massive deficits, and turned US Treasury bonds into the planet's most trusted financial asset. But that system is unraveling. In the last few years, Saudi Arabia has made oil deals with China in Yuan. Russia is selling energy in rubles and gold. BRICS nations are openly pushing for a new global reserve currency. And for the first time in 5 decades, the dominance of the US dollar in energy markets is being questioned seriously. So here's the real question. Is the petrodollar dead? And if it is, what comes next? In this video, we're diving deep into the real story behind global oil, the US dollar, and the power structure most people don't even know exists. By the end of this episode, you'll understand why world leaders are racing to abandon the dollar, how it could impact your money, and what a post-petrodollar future might actually look like. Let's get into it. Chapter 1: The Birth of the Petrodollar. To understand the petrodollar, we need to go back to a moment of crisis, a time when the United States was losing its grip on the global financial system. The year was 1971. After World War II, the world operated under the Bretton Woods Agreement. The US dollar was tied to gold at a fixed rate of $35 per ounce, and other currencies were pegged to the dollar. This system gave the US immense financial power, but it came at a cost. By the late 1960s, America's spending spiraled out of control. The Vietnam War, the space race, rising inflation. Foreign governments, particularly France, began converting their dollar reserves into gold. Gold reserves at Fort Knox started to dwindle. So in August 1971, President Richard Nixon made a historic announcement. The US was abandoning the gold standard. Overnight, the dollar became a fiat currency, backed by nothing but trust. It was a bold move. But it left the world with a serious problem. If dollars weren't backed by gold, why should other countries hold them? Confidence in the dollar wavered. Inflation soared. And America's financial dominance looked vulnerable. That's when the US made one of the most strategic deals in modern history, one that would quietly reshape the global economy. The secret pact with Saudi Arabia. In 1974, just 3 years after leaving the gold standard, the US government struck a deal with the Kingdom of Saudi Arabia. Here's how it worked. Saudi Arabia would price all of its oil exports exclusively in US dollars. In return, the US would provide military protection, advanced weapons, and political support. The Saudis would also reinvest their surplus oil revenues in US Treasury bonds and assets. Shortly after, every member of OPEC, the Organization of Petroleum Exporting Countries, followed suit. Just like that, oil, the most traded commodity on Earth, became tethered to the US dollar. Countries around the world had no choice. If they wanted oil, they needed dollars, which meant they had to earn or borrow dollars, which meant the US could run massive trade deficits, print money, and still remain economically stable. This new system didn't just create demand for the dollar, it created artificial, guaranteed, and global demand. It was brilliant. It was quiet. And it worked. The rise of the petrodollar system. This arrangement became known as the petrodollar system. And its impact was nothing short of revolutionary. The US could import goods without worrying about its trade balance. Foreign nations, needing dollars for oil, parked their savings in US Treasury bonds. helping finance America's debt at low interest rates. The dollar became the world's undisputed reserve currency, not because of gold, but because of oil. What's more, any attempt to challenge this system was met with extreme resistance. Just look at the examples. Iraq's Saddam Hussein began selling oil in euros in 2000. 3 years later, the US invaded Iraq. Libya's Muammar Gaddafi proposed a gold-backed dinar for African oil trade. In 2011, NATO forces toppled his regime. Iran, isolated by US sanctions, started selling oil in other currencies and has been under pressure ever since. Coincidence? Maybe. But the pattern is undeniable. Challenging the petrodollar has been a dangerous game. The world built around the dollar. For nearly 50 years, the petrodollar system kept the US dollar at the center of global finance. It was invisible to most people, but absolutely vital to how the world worked. Oil-exporting nations recycled dollars into Wall Street. Dollar reserves gave the US diplomatic leverage, and nations that dared step outside the system risked sanctions, or worse. It was a soft empire. No need for colonization. No need for force. Just energy, dollars, and debt. But here's the thing about empires, they never last forever. The world is changing. And for the first time in half a century, powerful nations are beginning to walk away from the dollar. Why now? And what might replace the petrodollar? That's what we'll explore in the next chapter. Chapter 2: The Golden Age and the Cracks. For much of the late 20th century, the petrodollar system wasn't just working, it was thriving. The 1980s and 1990s marked the golden age of US financial dominance. Oil demand skyrocketed. The Cold War ended. And emerging markets, especially in Asia, began their industrial rise. Through it all, the US dollar remained at the center of global trade. Every barrel of oil sold, whether it came from the Middle East, Africa, or South America, was priced and paid for in dollars. That meant every country needed dollars, and the easiest way to get them was by exporting goods to the United States. This dynamic created a self-reinforcing loop. Export-driven economies like China, Japan, and Germany accumulated vast dollar reserves. Those dollars were recycled into US Treasury bonds, stocks, and real estate. The US used this capital inflow to fund consumer spending, corporate expansion, and military operations abroad. It was, in many ways, a brilliant system. America imported goods, exported dollars, and lived far beyond its means, with minimal economic consequences. The petrodollar gave Washington extraordinary power. It could sanction rivals, fund wars, and stimulate its economy by printing more money, all without triggering a currency crisis. But underneath this apparent strength, cracks were slowly forming. First came resentment. Many countries, particularly rising powers like China, began to question why they should depend on a currency controlled by the Federal Reserve. The US could manipulate interest rates, devalue the dollar, or impose sanctions, all without consulting anyone. Second, oil producers started to see their wealth as political leverage, not just economic capital. Nations like Russia, Iran, and Venezuela grew tired of being locked into a dollar-based system that made them vulnerable to Western financial institutions and regulations. Then came the wars. From the Gulf War in 1991 to the Iraq invasion in 2003, US military action in the Middle East was increasingly perceived as a tool to protect not just geopolitical interests, but the petrodollar itself. When Saddam Hussein switched from dollars to euros for Iraq's oil sales, many saw it as a direct challenge to the system. His regime didn't last long. A similar fate befell Libya's Muammar Gaddafi, who proposed a Pan-African currency backed by gold. Whether or not these moves caused their downfall is still debated. But the message was clear. Leaving the petrodollar system came with consequences. Then came 2008. The global financial crisis shook confidence in the entire Western financial architecture. Major US banks collapsed. Trillions of dollars were printed. Interest rates were slashed to near zero. And central banks worldwide began questioning their overexposure to dollar-based assets. China, holding over $1 trillion in US debt, watched nervously. Russia started increasing its gold reserves. India and Brazil began discussing currency swaps. Quietly but surely, the world was preparing for alternatives. The final blow to the illusion of unshakable dollar supremacy may have come not from economics, but from politics. In recent years, Washington has increasingly used the dollar as a weapon. Through the SWIFT network, US sanctions could freeze assets, block payments, and effectively cut countries off from global trade. Iran, Venezuela, North Korea, and more recently, Russia after its invasion of Ukraine. The result? Even longtime US allies started seeking insurance policies. Europe explored a payment system called Instex to bypass sanctions. China launched its cross-border interbank payment system, CIPS. And Russia developed its own domestic alternative to SWIFT. All of this points to a global shift. Not a sudden collapse, but a gradual retreat. The golden age of the petrodollar was built on a world where the United States was the unchallenged superpower. And oil was the king of commodities. But times have changed. Today, America faces economic rivals, technological disruption, and geopolitical resistance on multiple fronts. Oil is still important, but clean energy, digital currencies, and regional trade are reshaping the future. And with that, the pillars of the petrodollar system are starting to shake. In the next chapter, we'll look at what's rising to take its place, and how the emerging alternatives may permanently alter the global financial order. Chapter 3. The Rise of Alternatives. Every system, no matter how dominant, eventually faces competition. And the petrodollar is no exception. As the cracks in the dollar-based oil trade widened, countries around the world began preparing for a different future, one in which energy is traded in multiple currencies, and the United States no longer sits at the financial center of the world. The most aggressive challenge has come from China. Over the past decade, Beijing has worked quietly but strategically to internationalize the yuan. Through its Belt and Road Initiative, China has extended infrastructure loans to dozens of countries, often with repayment denominated in yuan. It has also signed bilateral currency swap agreements with over 40 central banks, allowing nations to settle trade without touching the dollar. But perhaps the most direct strike at the petrodollar came in 2018. When China launched the Shanghai International Energy Exchange, a crude oil futures market priced in yuan. For the first time, oil producers could sell futures contracts in Chinese currency. At first, the impact was modest, but the groundwork had been laid. Then came the war in Ukraine. When the United States and its allies froze Russia's central bank assets and removed major Russian banks from the SWIFT payment system, it sent a message, not just to Moscow, but to the entire world. Dollar dominance comes with strings attached. Suddenly, being too dependent on US-controlled systems became a liability. Countries with tense relations with Washington, like Iran, Russia, and China, accelerated their efforts to trade in alternative currencies. In 2023, something historic happened. Saudi Arabia began accepting yuan for oil sales to China. This was more than symbolic. It marked the first time in nearly 50 years that the kingdom publicly agreed to break the dollar monopoly in oil transactions. Even more surprising was that the Saudis didn't stop there. In 2024, Saudi Arabia officially joined the BRICS Plus bloc, alongside major energy exporters like Russia, Iran, and the UAE. The BRICS nations, now controlling over 40% of global oil production, have openly discussed launching a new reserve currency backed by a basket of commodities, including gold and oil. The motivations are clear. Russia wants to avoid Western sanctions and sell energy directly to allies in rubles or yuan. China wants to reduce its dependence on dollar reserves, which are vulnerable to geopolitical pressure. India and Brazil want greater financial sovereignty in trade and investment flows. And Saudi Arabia, long seen as a pillar of the petrodollar system, appears to be hedging its bets. Even European countries, traditionally aligned with the US, are quietly exploring greater use of the euro in energy trade and seeking alternatives to the SWIFT system. Meanwhile, a new digital revolution is unfolding, one that could further disrupt the current monetary order. Central bank digital currencies, or CBDCs, are being developed by over 100 countries. China's digital yuan is already being tested in international settlements. The idea is simple: a programmable, traceable currency that can bypass traditional banking networks and settle transactions instantly. If widely adopted, CBDCs could enable countries to trade oil and other commodities without touching the dollar, or even a bank. This could fundamentally shift how global trade is conducted. And it's not just governments. Private sector innovation is also playing a role. Blockchain platforms, decentralized finance, and DeFi, and stablecoins are offering new ways to exchange value across borders. While still in their early stages, these technologies offer a glimpse into a future where trust is enforced by code, not central banks. So where does this leave the petrodollar? It's not dead, not yet. The dollar still dominates global reserves, global trade, and global finance. But its monopoly is over. A multipolar world is emerging. And energy, once the glue that held the dollar system together, is now being traded on a growing number of parallel tracks. What we're witnessing is not a collapse, but a transformation. One with far-reaching consequences for markets, currencies, and geopolitical power. In the final chapter, we'll explore what this shift means for the future, and why the end of the petrodollar era could be the most important economic story of our time. Chapter 4. The Future After the Petrodollar. The petrodollar system shaped the modern world in ways most people never realized. It gave the United States unparalleled economic flexibility, allowed emerging markets to grow by exporting to America, and created a global architecture where energy and finance were deeply intertwined. So, if this system fades into history, what replaces it? First, it's important to understand that the end of the petrodollar does not mean the end of the US dollar. The dollar will remain a major global currency for years, if not decades, to come. It's still trusted, still liquid, and still central to financial markets. But in a post-petrodollar world, the unquestioned dominance of the dollar begins to erode. The dollar shifts from being the default to being one of many. This transition means energy producers will begin pricing oil and gas in multiple currencies: yuan, rupees, rubles, euros, and even new BRICS or commodity-backed units. Global energy trade becomes more regionalized. Financial systems become more fragmented. And countries become more deliberate in their reserve allocations. Instead of holding mostly US dollars, central banks will diversify. More gold. More other currencies. More digital assets. This shift will reduce the automatic demand for dollars, especially among oil-importing nations that no longer need them to settle energy transactions. For the United States, this presents a major challenge. Without guaranteed foreign demand for its currency and bonds, America may no longer be able to run large deficits without economic consequences. Interest rates could rise. The cost of borrowing could increase. The US government might need to reduce spending, raise taxes, or both. In short, the end of the petrodollar means the US will need to live within its means, or at least closer to them. For other countries, especially developing economies, a multipolar system could bring both opportunities and risks. On one hand, escaping the dollar-centric system means greater financial sovereignty. Nations can negotiate trade in their own currencies, bypass US sanctions, and reduce exposure to Federal Reserve decisions. On the other hand, this fragmentation brings volatility. Currency risk increases. Trade becomes more complicated. And without a single global standard, financial shocks could ripple faster and more chaotically. There's also the question of who fills the vacuum. China is the most likely candidate, but it's not a perfect replacement. The yuan is not fully convertible. China's capital markets are not as open or trusted as the US system. And geopolitical tensions remain high. The BRICS currency project is promising, but still in early stages. Digital currencies, especially CBDCs, could play a big role, but lack interoperability and legal frameworks. Gold-backed settlement systems are under discussion, but would take years to gain scale and trust. In the meantime, we are likely to see a patchwork of systems, energy traded in local currencies, regional blocs creating financial alliances, and a slow decline in the dollar's share of global reserves. This shift won't happen overnight. It may take a decade or more. But the trend is clear. We are moving toward a world of currency competition, not currency hegemony. And the implications are profound. Global markets will become more sensitive to geopolitical risk. The margin for policy error, especially in Washington, will shrink. Nations will need to think more carefully about how they manage trade, debt, and diplomacy in a less dollar-centric world. But perhaps the biggest shift will be psychological. For over 50 years, the global economy has revolved around a single assumption, that the US dollar is permanent, indispensable, and invincible. That assumption is no longer safe. The post-petrodollar world is more uncertain, more complex, more decentralized. But it's also more honest. It reflects a world where power is shared, where trade is negotiated rather than dictated, and where financial systems are judged not by history, but by performance and trust. That's the world we're entering. And whether we're ready or not, and how it inevitably shifts. Conclusion: a new era of global finance. The story of the petrodollar is not just a story about oil or money. It's a story about power, how it is created, how it is maintained, and how it inevitably shifts. For nearly 5 decades, the petrodollar system allowed the United States to project influence across the globe without firing a bullet or shipping a barrel. The US printed dollars, the world needed oil, and the cycle sustained itself. Wars were waged, alliances were made, and currencies rose and fell under the weight of this unspoken arrangement. But that era is coming to an end. We are now entering a world that is no longer dependent on a single currency for energy trade. A world where power is distributed among multiple players: China, Russia, India, the Gulf states, and emerging economies. A world where financial infrastructure is being rebuilt from the ground up, fueled by technology, driven by geopolitics, and accelerated by distrust. The death of the petrodollar will not be sudden. It won't come with headlines or declarations. It will come quietly, through small decisions: one trade in yuan, one deal in rupees, one digital settlement without SWIFT. These choices will accumulate. And one day, we'll realize that the system we thought would last forever is already gone. So what does that mean for you? It means that financial literacy is no longer optional. Understanding how global currency flows work, how energy markets influence monetary policy, and how geopolitics shape your wallet is now essential. It means that investors, savers, and citizens around the world must prepare for a future that looks very different from the past. A future with more volatility, more fragmentation, and more opportunity for those paying attention. And most importantly, it means we must question the systems we've taken for granted. Because every empire has an expiration date. And every financial order, no matter how dominant, is eventually replaced. At Money Minded, our mission is to help you see these shifts before they become headlines, to give you the context behind the chaos, and to equip you with the knowledge to navigate uncertainty with clarity. If you found this video insightful, don't forget to like, subscribe, and share Money Minded with others who want to understand the forces shaping the global economy. This is just the beginning. We have more eye-opening stories and deep dive analysis coming your way. The petrodollar may be dying, but your awareness is just being born. Stay curious, stay informed, and remember, the most powerful currency in the world isn't the dollar, it's knowledge.